You wanted the best. You've got the best podcast, the hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hi, folks. It's Voss here from thechrisvossshow.com. There you go, ladies and gentlemen. When the Iron Lady sings it, that's when you know it's official. Welcome to the big show, my family and friends. We certainly appreciate you guys being here. As always, for 15 going on 16 years now, we bring you the most smartest people, the most brilliant minds to deliver to our audience the massive amount of intelligence, data, inspiration, everything that you need to fill your day other than a nice warm cup of joe or tea, I guess, if that's your thing. We have the most amazing people on the show: the CEOs, the billionaires, White House presidential advisors, governors, Congress members, U.S. ambassadors, astronauts, Pulitzer Prize winners, just an elite crowd of folks who come share everything you could ever know in life, because stories are the owner's manual to life, as Chris Voss says, if I can talk in the mad third person of one of my personalities, thereby giving you the Chris Voss Show glow, as we like to call it. We have two fine people on the show today talking to us about what they're up to and their company, JT Capital Group. We have Denver Lobo. He's the managing principal at JT Capital. And we have Deepa Akula, who's also a managing principal at JT Capital. And we'll be talking about her company and his company, which is a boutique real estate private equity group specializing in industrial grade. It's late in the day, folks. Institutional grade multifamily properties in vibrant submarkets of Texas and Florida. Denver spearheads the Capital Group Markets Group and focuses on multifamily properties. He's an energetic and forward-thinking leader with over 10 plus years of global finance, fintech, and real estate experience at both multinational organizations and startups. His journey began at Credit Suisse, where I haven't put money in a number account of this, so I don't know how it works, where he spent 8 years in investment banking, raising over $4 billion in debt capital for companies across Latin America and Asia from institutional asset managers across the U.S. Deepa is a highly accomplished leader, real estate investor with over 14 years of experience in engineering and commercial real estate. She currently serves with JT Capital, and she leads their investor relations group. Welcome to the show, both of you. How are you?
Good, really good. Now that we are here.
There you go. Welcome to the show.
Thank you so much for having us on the show. And the voice that came on earlier sounded like me in the shower. So
Chris Voss. Is that the voice you make when you think the hot water's coming and somebody turns a faucet on, it goes to cold really quick?
Exactly. You don't want to hear my Taylor Swift.
We have that here at the house.
Oh, I'd love to hear that.
I hear it's a feature where you're in the hot shower and then somebody turns on like a washing machine or something, and all of a sudden you have ice cold water being pelted upon your naked body. Anyway, moving on, because it's not one of those kind of shows. You can find the rest of that on the OnlyFans Chris Voss Show, folks. There's not one. Anyway, guys, so give us your .com so we can find you guys on the interwebs.
Go ahead, Denver.
Yeah, so you can find us at jtcapitalgroup.com. And then you can find me on LinkedIn. Just Denver Lobo would be perfect.
Yeah,
there you go.
Same website, and on LinkedIn, I'm Deepa Akula.
There you go. And so give us a 30,000 overview of what you folks do over there at JT Capital in your guys' words.
Yeah. So thank you for asking, Chris. So at JT Capital, we are a private investment group, and we specialize in acquiring and managing multifamily assets. And they're institutional grade in core markets of Florida and Texas. And so far, as a group, we have transacted $1.5 billion worth of property. So, yeah, we
there you go. Well, basically, it's two homes, right? Is that the way real estate's going right now?
It's hundreds of units.
My mom's old single
Family.
family resident home is like worth $1 billion, I think, right now. It's a crazy market.
Yeah,
Oh my
it's
gosh.
50 million per month in your monthly payment for your mortgage.
Nice. Yeah, it's insane. Like, she called me and she goes, the next door neighbor's selling their house. I'm like, for how much? And it's like, it's an extraordinary sick amount for a 30-year-old home. Like, I was just like, I did her first refinance like 20 years ago or something. Anyway, with my mortgage company. So tell us, who are your guys' clients? Who do you guys help, and how do you do it?
Yeah. So we partner with busy professionals
Mm-hmm.
who want to be invested in real estate but they don't have the time or resources to go after acquire these assets and run them. And there are capital partners, they're passive investors, and we find, acquire, do due diligence, and run the assets and share the profits with them. So we are really passionate about delivering double-digit returns.
Mhm.
Focus on returns, but our priority is on capital preservation
Mhm.
and risk mitigation in this market. That's huge. Like, not capital preservation is huge. So yeah,
Yeah,
that's what we
it's always
prioritize.
good to preserve that capital because, and don't loan money to friends. Anyway, I don't know what that means. Institutional. I had a friend post something on Facebook today. Institutional grade assets, active asset management, and strategic risk management. And there's a lot of investors out there that may be doctors. We have many people on the show like yourselves. Doctors, dentists, retired folks. They want to get into real estate. They know it's usually a safe harbor for a lot of things. It's very different than buying crypto. And so they want to get into it, but they don't want to, they don't want to have to learn how to, I don't know, go in and change a water heater, right?
Right. We offer an amazing solution for folks that have the capital and don't have the time. You think about getting invested in real estate, and if you go buy a property, just managing it, renting it, and dealing with the tenants is a lot of work. And we don't deal with single family. It's all multifamily, just big assets, over 200 doors on one lot in one spot. So we have economies of scale, and we also have groups that service the residents. And it's just very much easier for professionals who want to be invested, part of their portfolio to be in real estate, and don't have the time. They can partner up with us, and we do all the work.
There you go. And then you guys have a fund that this works under?
Yes, Denver.
Yeah, so we just launched the JT Capital Strategic Income Fund. And the investment objective there is to provide investors with a portion of current income, so through quarterly distributions, and then equity upside when we sell some of the investments inside the fund. And the fund also, to Deepa's point, looks to reduce risk by investing in high quality assets, very experienced sponsors as well. And then it kind of offers investors diversification for multiple assets in one fund, so that its correlation to the traditional stocks and bonds out there is low. And so it allows investors to not put all their eggs in one basket and kind of get a diversified source of income.
There you go. How do you feel that this is maybe better than putting some being in the stock market or other competitive markets out there, or investment things out there? How do you guys feel this is better than that?
Yeah, so it's macro versus micro. That's the best way I'd put it. Macro is impacted by so many things, right? Like a war somewhere, interest rates, on a very macro level. When you invest money in the stock market, you have very little say as to what you can do within, if you invest in the S&P 500, the 500 top companies in the US aren't going to listen to what you have to say about their business model. Versus on the micro level for real estate, a very small team within our group manages 250 plus units in a very efficient way. And we have a lot of say over the business plan, the operational procedure that we do things. And at the end of the day, at every single step of the way, we're working with people. From we're working with great tenants to having staff on site, to working with property management companies as well, and then ultimately our team that we're conversing and making sure that everyone's aligned, everyone's incentives are aligned, and just making sure we're working with good people.
There you go. And so people can do the investment there. Of course, real estate. I mean, there's a real estate inventory glut right now. I mean, and so real estate's gonna stay strong, regardless of where interest rates have gone, because I think we're about 7 million inventory lower than what we really need for demand in single family, and multifamily is building out a lot right now to try and fill that, because a lot of people can't afford single family residences, so they're moving to multifamily. So there's a huge demand for it. You guys are in the two states of Texas and Florida. Is there a reason you guys don't like North Dakota?
We want to be in business-friendly states.
I'm not sure there's a multifamily place in North Dakota. It might be like, I don't know. There's 5 people there.
There's apartments everywhere, Chris.
Yeah, I know.
And we've always, that's where we started. That's where the company started. And some of our team members live in Texas, and we have a good base in Florida. And we really want to play in markets where we feel comfortable and we know the data down to the zip code level. And you talked about the supply coming online. We are very data driven, and we use tools like RealPage Analytics and CoStar to know how many properties are being built, how many permits are being pulled, and how many units will be delivered. And all this data helps us tailor our lease terms for our apartments to keep occupancy high, because as inventory hits the market, we have to adjust.
And I know,
Chris,
go ahead.
Here's where we have an unfair advantage, right? Because we've owned and operated multiple assets in each submarket. Therefore, we know what rents should be, what occupancy is, what vacancy, what delinquencies look like. And through all of that data, we can kind of overlay the data that's out there, because just from doing that part, we've reduced our competition by 80%. However, there are much larger companies than us, your BlackRocks, Blackstone, Oak Trees of the world, that also have all the data. However, because of our competitive moat in these submarkets, and it goes back to the micro level point here, we are able to compete with them because we can overlay that data with our own to make better and informed investment decisions.
There you go. I imagine these two markets are really great to be in. I know that post-COVID, or during COVID and post-COVID, Californians were moving largely to Texas. There was, Elon Musk, I think, moved some of his companies there. A couple of Silicon Valley companies, I think, moved over there. And then I guess people from New York were flooding to Florida as well. And I don't know, maybe some of the thinking is if you move to warmer climates, they tend to survive COVID better because they had, warm air helps. I don't know. Hot air helps.
Jeff Bezos as well. Just recently announced that he's moving to Florida, and portions of Amazon are also going to move there.
Wow!
So it's the weather's amazing. That's probably why we picked. Texas. The tax structure is also great, right? You don't have state income tax, which is super helpful for families, especially trying to pay for a house and whatnot. It's a little bit more affordable. And so you see a lot of young families moving to Texas and Florida. They have great schools, employment incomes on the rise. And that's what we look for, not only on the state level, not only on a city by city level. We look at it down to the street level. And that's how granular you have to get with the data to make it impactful.
Plus, between Austin and the rest of Texas, it has some of the best barbecue ever. I might alienate some people saying that, I think, but
we were actually just at Salt Lake. yesterday.
Oh, really?
Which is definitely one of my favorite barbecue places, and they have a very mean beef rib, and I could eat that every day.
Yeah. Then there's is it Franklin's? It's in Austin that has the giant line. And
Yeah.
I think
Oh my.
he did a masterclass.
Yeah.
But yeah, it's
There's always around a 2 to 3 hour line.
yeah.
Terry Black's is another one that's fantastic food.
Yeah.
Texas definitely has their barbecue down.
Yeah, that's the only reason I haven't moved to Texas is because I live there. I weigh like 500 pounds. When we go for Austin, because we do a lot of shows and interviews with CEOs at South by, I literally I come home just sweating like meat juice because I've eaten so much barbecue when I'm there, and so there's no way I could survive if I went down there. So when does this fund launch? Is it launched now or is it launch soon?
Yeah, so the fund launched on Monday last week, actually, so relatively soon. And we are accepting investors into the fund. The great thing is we're offering an early bird special as well for investors that join. They get a higher equity upside.
Oh, really?
In the returns. Yep. It's just, an incentive to say, hey, we're ready to go with this. And we're seeing almost $2.5 billion worth of opportunity, and our fund is going to go towards 1 to 3% of satisfying that demand. So it's just such a lopsided kind of opportunity that we just feel like we can pick and choose the best investments, reduce risk for our investors, and put this together as a investment offering, not only for this fund, but hopefully for follow-on funds as well.
There you go. What's the minimum net worth or amount of investment? What are some of the qualifications people need to have?
Yeah, so it falls under accredited status. And what that is it says as a family household income, you need to be making at least $200,000 per year, or you need to have 1 million more in assets. And what JT Capital offers is we partner with InvestReady, which is a accreditation firm that has been doing this for over 15 years. And we actually pay for our investors to get that certification. So they don't have to, all they have to do is go on there, put their W-2 in, and they get their certificate, and they can invest in this fund.
There you go. I think there's lots of people at 200,000 now.
Yeah,
it's
guys,
it's pretty normal, isn't it? No,
I think you have to have $200,000 as an individual in the past 2 years, and reasonable expectation of having the same income in the future, and $300,000 as a family, I believe.
Oh, there you go. There you go.
Or $1 million in net worth without the equity in the primary home.
Yeah. We guys take checks? No, I'm kidding. That's a joke we always use. We always do that.
No.
Well, you guys take a check. There you go. So this is a great way they can get into it. Now, let me ask you this: are you guys buying the properties, or are you guys building them? Are you guys buying them already built and then investing in from there, looking for deals, or are you building the multifamilies?
So in the past, we have just acquired the whole asset, like 23 acres, and like how many ever units? 300 units, just bought them. But Denver and our CEO Supin, they both thought about it, and there's this big opportunity where there's amazing assets. Without buying the whole asset, we can actually deploy a small slice of capital. I say small, maybe $3 to $7 million, and have access to the asset instead of spending like $90 million and buying the whole thing and running it. So the fund will actually be investing in in-play assets.
Okay, there you go. There you go. So you don't have to wait for stuff to be built and start bringing in income.
Right.
Do you guys, I know that, there's certain rules on investments and quoting, and, I don't know how it works, especially with the stock market where, you have to get a prospectus and all that stuff. Do you guys have an anticipated percentage of annual return you can quote at all? Or is that something that you got to have a prospectus for?
No, this is actually on our website too, because it's a 506c fund. It only allows accredited investors on there, so we can market the fund as well. And so we offer 2 share classes, one that has a 12% preferred return, and then one that has a 10% preferred return with equity upside. So it depends on you and what you're looking to add in your investment portfolio. If you're looking for something more stable and say, I don't want to keep this in my bank account that's earning me 0.5% per year, and want to sort of park it in a more higher yielding investment with de-risked assets. The other side is saying, I know the opportunity set and I know what you're investing in. I would like to see equity upside in some of the investments that you're making, because ultimately we are investing this money so that this operator can bring the asset to sale maybe 1 to 2 years down the line. And when they sell, hopefully they're selling at a higher price than when we get in. And so we can kind of share that back with our investors. And our fund is a pass through, right? Like when we make money, we pass it through to our investors. And so trying to be as open and transparent with that.
There you go. So it looks like on the A option, which is here, let me hop back to this. You need a 50,000 for the Class A shares, limited partner, 50,000 minimum investment, and then 100,000 minimum investment for the Class B.
You're right. Yes.
There. Will you take a check? No, I'm just kidding. It's a good callback joke. So there you go. Minimum investment and all that good stuff. What about reinvesting, dividends, distributions, all that stuff?
Yeah, like, so, you as an investor, if you're getting 12% per year, for example, you can choose to reinvest that, and we will kind of redeploy that over and over again until the end of the life of the fund, which is 5 years. And so not only do you get a return on your original capital, but you're now compounding this capital into more capital, which is the whole idea of compounding interest and real estate as well, right? You really want to have time do its thing. On the flip side, people have schools to pay for and food to eat. And, some people want actually some investors that are potentially not working anymore just want a consistent stream of income. And that's a perfect way to just get a monthly income and park some money in an investment like this.
There you go. There you go. What's the liability as an investor? Like this is like crypto where it can go from $40,000 to zero overnight. I know it's a dumb question.
So I'll answer that in two parts. The liability is zero because we structure these as limited liability companies. And so whatever you put into this fund is your max loss. You cannot lose, like we cannot come after you for your house or your car because we've lost anymore. The second thing is, and the beauty of real estate is that you have collateral, right? You have a multifamily asset there that's a beautiful kind of structure with a gym and a pool. And those are the types of assets that we're investing in. They're not going anywhere over a 5-year period. And in fact, there's more and more people even looking for opportunities like that, just because the cost of buying a house is so expensive.
There you go. And how often do you guys pay distributions?
So distributions are done quarterly. So all our reporting distributions are done quarterly. And the benefit of that is an investor receives an open book of saying, these are the investments we made, these are the returns, here are our financials, and here is your return for the quarter.
There you go. So what do you guys see as the future of what's going on with maybe multifamily, the real estate market? I think I was seeing someone from Goldman Sachs or one of the big firms, Merrill Lynch, maybe, I don't remember who it was, but they were actually predicting that within maybe the first quarter, the Fed might start lowering rates again. What do you guys think? Or see in your crystal balls?
The fundamentals are strong, Chris. But talking about the interest rates, for the past few months, actually for past few weeks, maybe 3 or 4 weeks in a row, right now the interest rates have dropped. So it's going to help out all the assets out there that have variable interest loan. We don't know. It's hard to predict if the Fed's going to cut the rates or not. But
it's good for you guys if they
right
do.
now, they're coming down.
Yeah. I mean, it gives you guys more funds to do whatever.
Definitely.
And invest. I mean, I don't know how we're ever going to catch up on this glut we have in housing. I mean, We're like 7 million units behind from what
Yeah,
you're saying.
like in single family, there's some very unique stuff going on. Like there's modular, there's 3D printing, and stuff that today the cost is the same, but the time to build is actually much faster. So you actually gain money because of time.
I'm still using cardboard, but I live in the viaduct, so that's
down
by the river.
And there's really cool structures that you can build a beautiful home in, around 2 weeks.
Yeah.
With modular, if you walk in one of these places, you wouldn't even be able to tell. And that's the beauty of it. Multifamily, a little bit different, takes a little bit longer. They're just much bigger structures. You have to gut the entire, the pipelines and stuff underneath and make sure it kind of works with such a big structure. And there's so many laws and permits that you have to actually get. And so single family versus multifamily is just a very, very different space.
There you go. I'm so jealous of my Florida friends right now because I'm visiting Utah, normally in Las Vegas, but I'm visiting Utah and it's freezing cold here for the holidays. And there's snow. There's this thing called snow. And my friends are sending me nasty pictures in Florida on the beach, and it's 80 degrees and there's the ocean and they're out frolicking. And I'm just like, is that from the summer that you posted that? Like, no, that's now. I'm like, I hate you people.
That's funny. I'll text you later, Chris.
Or you must feel better. Like, this is how it is. I'm in Seattle. It's raining.
Oh yeah. I mean, you guys. I've heard you guys have when the sun comes out. That's a holiday for you guys up there.
Oh yeah.
Yeah. You have a Sunday, I think they call it, and everybody takes the day off of work. I think the same is true of London. They're like, look, the sun. We should see it. Well, it's here.
Yes,
so there you go.
I went to Notre Dame for college, and South Bend, Indiana is the same way. Like we have winter for 9 months, and 6 months of that is 3 feet of snow.
Yeah.
And I actually I was born in India, lived in Kuwait all my life, so I'm used to 120 degree weather. Going from 120 to minus 20 on some days was pretty painful.
I'll do it. You need to move to Arizona so you'll feel comfortable.
Yeah, I mean, Texas is up there in the summer.
That's true, huh? Yeah, Texas gets up there, and then you have the humidity in the thing. So it sounds pretty good. Is there a vision of future that your company's working on? Do you want to get to a certain point of assets under management? Do you see yourself developing in other states? What's kind of the vision of future of whatever you guys are thinking about over the next 5 to 10 years? Should I be asking your CEO?
Deepa, I think we can't hear you.
I'm sorry, I was on mute. There's some work going on in the background, so I'm muted.
Oh, okay. All right.
No, so it's so far, Chris, like we learned how to run these amazing multifamily assets, all institutional and luxury apartment communities, like beach style decks and pools and resort style pools and awesome assets. So we know how to run them. And the goal now, and we've always been very, not very high quantity, but just high quality, a low volume shop so far. And we've built the foundation. And the future is we're going to start with this fund, which is $50 to $75 million, and just build bigger and bigger funds and deploy more and more capital.
There you go. Sounds like you guys are on your way. Go ahead.
Yeah, and Chris, again, the other thing that's unique about JT is that we have a very targeted team that has a lot of ownership over their kind of silo. And what that allows us to do is ultimately we don't have 20 to 30,000 people and mouths to feed, right? That the bigger guys have a huge organization and have to churn a certain amount of deals in order to just keep the lights on. For us, we can be extremely selective in what we choose to do. And the part of, what we're trying to build is a 100-year brand. Like we're not in this to be in multifamily for 5 years and then get out of it and then be in it. The partners here have been doing this for 15 years, and we plan to, have this be a generational kind of wealth builder, not only for us, but our investors as well. And
there you go.
And the second thing is just of what we plan to do, especially within this fund. The opportunity set is just so large right now that we don't even need to stretch into other strategies or other investment classes. Like, for example, two of the ultimate uses of the funds that we're deploying this fund into are a funding gap and rate cap expiry. And so for a funding gap is when a multifamily property goes to refinance their property, they're actually not taking money out. They actually have to put money in. So CBRE, which is a very large lender in this space, estimates that there will be around $21 billion worth of cash in, so a funding gap next year, and that's going to expand to around 40 billion by 2026. Wow. Now, if you think about the size of our fund versus that opportunity set, it's 1 to 3%, which just means that we can be very selective. The second thing, again, rate caps that are expiring next year. A lot of the multifamily space is focused on what happens if a rate cap expires and a multifamily owner has to now pay a much higher interest rate. And that's estimated to be around $4 to $5 billion per quarter in 2024. So again, we're just seeing so much opportunity in the space. We don't think it'll last forever, and that's why we're kind of moving now. And that's the ability of our small team to, do all the institutional diligence, but move as fast as a startup, which is kind of something that we like.
Nice and small and agile. So thanks, guys, for coming on the show. Give us your final pitch out and tell people how to onboard, reach out to you guys, interact with you guys, and see if they're a fit.
Yeah, please reach out to me on LinkedIn or to Denver on LinkedIn. And if you're a busy professional and have some capital and want to diversify into real estate, please reach out to us at www.jtcapitalgroup.com. And you can look at our fund details up there. And you can always email us at invest@jtcapitalgroup.com, and we can take you from there.
There you go.
Yeah,
thank you. Go ahead.
Chris, also, if this is your first time as well looking at a real estate investment, we'd love to speak to you because whether it's this fund or our 10th fund, we want you to kind of learn about this asset class because it's an amazing diversifier of your investment portfolio. I'm not saying don't have stocks and bonds. I'm saying have that, but also diversify it into these other much higher yielding and potentially lucrative investments for yourself.
There you go. Thank you very much, guys, for coming on the show. We really appreciate it.
Thank you so much
for having us on, Chris.
Yeah. Thank you so much.
Thank you. And thanks, your audience, for tuning in. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss. Subscribe to the big LinkedIn newsletter, the 130,000 LinkedIn group over there. Let's see. There's Chris Voss 1 on the TikTok and Chris Voss, Facebook.com. Be good to each other. Stay safe, and we'll see you guys